Hello again, everyone. This is Joe Hentges with Beyond the Chart, and in this China update, I'm going to show you how I think the Chinese stock market has been influencing the U.S. stock market. So stay tuned. All right, let's start off here with the China Composite. We'll take a look at it. So you can see today it was down 2%, which was down almost 58 points. Now, that doesn't look like a whole lot, but it's back down below the 21-day moving average. This is 21. This is my 10 exponential. This is a 55-day simple, okay? And so what we've got, we do have the lowest close of the last 7 days in here. It does look like it's starting to pull back down again. And if this starts to get a little momentum and heads down towards these lows down here and breaks these lows, I think we're in for some, additional movement of 10 to 20%. And I say 10% because this support zone down here is at least 10% below. We're talking 24, say 2450 is kind of like the middle of it, and that's what 450 or 350 points below where it closed today. So that's well over 10%. And if that doesn't hold, this little consolidation doesn't hold, then we're probably talking about coming down to where these previous lows are, right down in here at, like 2280 to 2300. So down all the way down into here. So significant chunks of the Chinese stock market. Let's take a look at the Shenzhen, which is kind of their NASDAQ, is my understanding. And you can see that it's turned back down also. It also has these key support points. And here's the longer term picture on it. You can see the big rally, how when it rallied back up, it could not get above these previous rally points, provided strong resistance in here. Now we've got this little support zone that's slightly above this August or September low in here. So that's what we'll be watching, this step first, and then this one. And then it's going to be down into right around 1500. I think it might be the next support zone, but we'll be watching that. I think Shanghai is the one that gets a heck of a lot more visibility on it. Now, the other one I wanted to point out and talk about is the Ishares Large-Cap ETF Fxi. So this one is a very popular ETF. Also, as a matter of fact, the 50-day average volume on this is 31 million shares. So this is heavily traded. And you can see the bounce that's occurred here in February into early March came right back up to the the resistance zone that was formed by these two lows back here in August and September. Okay, so now the key thing I'll be watching for is a breakdown of this trend line, and we break through that trend line, then that's a sign that there's a good chance we're getting ready to turn back down and at least go for a retest of this low. So now let's take a look at the Shanghai Composite and the S&P 500. So here I've stripped out all of the noise, all the moving averages, everything else. And we're talking about the beginning of January, beginning of 2015, okay? You can see the S&P 500 peaked out. The top was in May of 2015. The Shanghai Composite then peaked the next month in June, okay, like mid-June. Now, the interesting thing is the Shanghai then plummeted very rapidly down like this and broke, whereas the U.S. stock market really didn't. It started to go that way, then kind of pushed sideways and got in sync. So the move down in the S&P 500 was not very deep at all. It kind of stayed up into this top. Well, then when the Shanghai broke again and it started to break down here in August, that's when the U.S. stock market played catch up and broke well below this top and kind of got in sync with the dramatic type movements that we're seeing in Shanghai. Now, then the interesting thing, the next step, the next phase, is we had this counter trend rally back in the Shanghai. And you notice how it wasn't very sharp and deep. It was kind of shallow, got basically held underneath, pretty much underneath this resistance area right in here, okay? So let me point this like right in there. You can see it kind of held below the body of that for most part. Whereas the U.S. was very deep, pulled all the way back up into the top in a deep retracement. So then when this broke again and broke down in late December, starting into the first of the year, we were having to play catch up again. Our market played catch up with the deep move that was going on with China. And China continued to go below the August low in here into late January. Now we did on a kind of a one-day basis break the August low, as you can see right here, the blue line in January 20th. And then we came back down and we did it again, a little bit delayed in here. So it seems like we seem to be having a little bit of a delay function, kind of, with China kind of keying off the move. Now, the other interesting aspect here is, and this is the last point, is the deep the pullback that we got, this deep pullback that we got on the S&P 500 right here, the blue, again, was not followed by a deep pullback in the Shanghai Composite. It stayed very shallow in here. Okay, and now if we're looking like if we start to turn back down again and we break down through here and break down to support, this is going to rapidly play catch up again if it stays with the pattern that it did here and here. Now I have an entire wave count on the S&P 500 that tells me that yes, we are ready. We're getting very close, if not we're there for the next move down. And so that could very well be in sync with the fact that if the Shanghai starts to break down, which it's kind of interesting that today down 2%. So this is going to be an interesting little scenario to continue to watch. And again, some people say, well, why are we so concerned about, China? As we know, China is the second largest economy in the world. Heavy trading partners, not only, for us, not our main one, but, a big one, but for many, many, many countries all around the globe. So, I mean, everything is so closely interwoven, but especially now with China. And so that's going to be really interesting. And of course, China kind of drove a lot of the commodity related type boom that occurred. So this is the scenario that I'm seeing right now. I hope you found that helpful. And I'm going to try to every Thursday have something related to China and or the global markets / emerging markets type thing. So this has been Joe for Beyond the Chart. Hey, check out the website. I know I've got a post out there, and sign up to get the short-term updates that I put out Monday, Wednesday, and Friday too. You hit the little email entry down here below, or click the link, I guess, and it'll take you over there. So, all right, everyone, have a great day. Talk to you on the next video.